Hey traders, have you ever jumped into a trade full of confidence, only to get stopped out right before the market reverses in your favor? Or maybe you've hesitated on an entry, watching the perfect move slip away, because you weren't sure where the big players' stops were hiding. If that sounds familiar, stick around today. I'm showing you a game-changing tool that can help you spot those high-risk zones and trade smarter. This indicator is all about highlighting potential liquidation zones on your chart. In simple terms, liquidation zones are areas where leveraged traders might get forced out of their positions if the price hits them. Think of them as clusters of stop losses that can act like magnets for price action. It solves the problem of blind entries and exits by showing you where the market might sweep for liquidity, helping you avoid getting caught in fakeouts or using those zones for better risk management. Traders love it because it adds a layer of insight into market dynamics, especially in volatile assets like crypto or futures, making your trades more precise without overcomplicating things. Add the indicator. All right, let's get it on your chart. Head over to TradingView, click Indicator button, search for Liquidation Zones Chart Prime in the Indicators menu. It's free to use and add it to your favorite chart. How to set it up on TradingView. Once added, click the Settings gear icon. Here's the step-by-step. First, the Length setting. This determines how many bars back it looks to find pivot points for calculating zones. For beginners, start with the default, around 10 to 20 bars. But if you're on a 15-minute chart, try 30 for a good balance. Next, Extend. This controls how far the zones stretch across the chart. Default is fine, but bump it up to 100 to 200 if you want longer projections. Then, the leverage options. You can toggle on or off zones for 10 times, 25 times, 50 times, and 100 times leverage. I recommend keeping all on at first to see the full picture. But if you're trading lower leverage, turn off the higher ones to declutter. Finally, check the Display Heat Map box if you want that mode. It turns the zones into a visual heat map showing liquidity intensity. For time frames, this shines on 5-minute to 1-hour charts for day trading, especially on crypto pairs like BTC/USD or futures. Avoid super low time frames like 1 minute to cut down on noise. Key features. Leverage zones. Detection. It spots price zones where traders using 10 times, 25 times, 50 times, or 100 times leverage are most likely to get liquidated. These zones are calculated from recent pivot highs/lows using percentage moves. Approximately 1% against price wipes 100 times longs. Approximately 4% hits 25 times. Green zones. Below price. Long liquidations possible. Red zones. Above price. Short liquidations possible. Liquidated zones and volume tracking. Shows gray areas on the chart where price has already swept through and likely liquidated positions in the past. It tracks how much volume was involved in those liquidation events to show real market pressure. Helps you see if a zone was taken out already, so you avoid fake signals. Buy/sell volume. Calculation adds up bullish candle volume, potential short liquidations, and bearish candle volume, potential long liquidations inside the zones. Gives you insight into which side has more aggressive pressure building up. Higher volume in a zone often means stronger reaction or cascade when price reaches it. Liquidity heat map turns the zones into a colorful heat map instead of plain lines/boxes to show intensity of potential liquidity. Hotter/brighter colors, higher chance of clustered stops/orders/liquidations in that area. Makes it visually easy to spot the juiciest zones where price might reverse or accelerate fast. How to trade with it. Now, the fun part, turning this into profits. Remember them? Always combine with your overall strategy, like trend analysis or other indicators. For long entries, look for price dipping toward a green lower zone. This could be a liquidity grab where stops get hit, creating a bounce. Wait for a reversal signal, like a bullish engulfing candle or RSI oversold. Enter long. Once price starts rejecting the zone upward, stop loss. Place it just below the zone's bottom to protect against a true breakdown, say 0.5 to 1% below, depending on volatility. Take profit. Aim for the next red upper zone as resistance, or use a 2-to-1 risk-reward ratio. Partial profits at halfway points keep things practical. Pro tip: in trending markets, trade in the direction of the trend. Longs in uptrends near lower zones, shorts in downtrends near upper ones. There you have it, a straightforward way to level up your trading with liquidation zones. If you found this helpful, smash that like button, drop a comment with your biggest takeaway, and subscribe for more trading tips. See you in the next video.